Hey everyone, welcome back to Corporate Decoder, the place where we decode the cryptic messages companies send to the world. And trust me, this next one is a little bit of a head scratcher. We're taking a deep dive into Biofrontera Incorporated's latest filing, and boy, do they have something interesting to share about their stock. Let's uncover the story behind the headlines before we jump in. If you are new here and love getting plain English insights into corporate filings, make sure you hit that subscribe button. And for even more exclusive content and discussions, join our Discord community link down in the description. So, what is this all about? Biofrontera Inc. has just filed a Form 8, which is essentially a report for big, unexpected events that shareholders should know about. Think of it as the company's way of saying PSST, pay attention to this. The key date here is the 31st of December 2025. On this very last day of the year, the company received some news from the Nasdaq stock market, or Nasdaq as most people call it. The filing goes under a rather ominous heading, Notice of Delisting or Failure to Satisfy a Continued Listing Rule or Standard. That sounds pretty serious, right? What is going on? Essentially, Nasdaq sent Biofrontera a letter saying their stock price has been too low for too long, specifically for 34 straight business days. The price of their common stock, meaning the shares that everyday investors can buy and sell, has been below $1 per share. Now, Nasdaq has a rule that says if your stock consistently trades below $1, it could be delisted, meaning it might be kicked off the exchange altogether. Imagine your favorite store being told it can't sell its products anymore. That is kind of the big picture here for investors. But don't panic just yet. Nasdaq usually gives companies a grace period to fix these kinds of issues. Biofrontera has 180 days, which is about 6 months, to get back in compliance. That means by the 30th of June of 2026, they need to show that their stock price has been at least $1 for at least 10 consecutive business days. It is like getting a warning and a chance to clean up your act before major consequences kick in. Now, this part gets a little technical, but it is important. If they can't get the stock price up to $1 by that June deadline, they might have another option. They could potentially get more time. This usually involves meeting other Nasdaq requirements, like how much their company is worth based on its publicly traded shares, and showing they still meet most other rules for being listed. The filing even mentions a possible reverse stock split. What is that, you ask? It is basically when a company reduces the number of its outstanding shares, which in turn increases the price per share without changing the overall value of the company. So, if they have, say, 100 million shares trading at 50 cents each, they might do a reverse split to have 10 million shares trading at $5 each. It is a common tactic to meet minimum price requirements. Biofrontera says they are going to keep a close eye on their stock price and are ready to consider different actions to fix this problem and stay listed on Nasdaq. They know it is important to be on a major stock exchange for investors and for the company's reputation. Let's look at what exactly is registered and traded on Nasdaq. They have their common stock, which is what most people think of when they talk about buying stock in a company. They also have something called preferred stock purchase rights. These are often part of what is called a poison pill plan, designed to make a company less attractive to a hostile takeover. And finally, they have warrants to purchase common stock. Warrants are like options where the holder can buy a company's stock at a specific price before a certain expiration date. These are often issued along with other securities or as part of financing deals. One interesting tidbit is that Biofrontera has checked the box indicating they are an emerging growth company. This means they are a relatively newer public company that gets some benefits like being able to delay adopting new accounting rules. It shows they are still in a growth phase. Now, let's look at the bigger picture. Why would a stock price fall below $1? Often, it is because investors are losing confidence in the company's future prospects, or perhaps the company is facing significant challenges. A stock price below $1 can also make it harder for institutional investors, like mutual funds or pension funds, to buy shares as many have policies against investing in penny stocks. The fact that Biofrontera received this notice might make some investors nervous. However, the company has a 6-month window to rectify the situation. They can try to improve their business performance to naturally boost the stock price, or they can implement strategies like a reverse stock split. A reverse stock split, while sounding a bit technical, is a common tool for companies in this situation. It doesn't magically make the company more valuable, but it can help them meet listing requirements and appear more attractive to a wider range of investors. We don't have detailed financial tables directly in this specific 8K filing, as its primary purpose is to announce this compliance issue. However, this situation usually stems from underlying financial performance or market perception issues. If a company's stock price is consistently low, it often signals that the market isn't valuing the company highly. This could be due to slowing revenue growth, increasing competition, or concerns about profitability. Looking at the bigger picture, Biofrontera is in the biotechnology sector, specifically focusing on medical devices for treating skin diseases. This is a competitive field, and companies often face hurdles with product development, regulatory approvals, and market adoption. The stock price performance is a reflection of how investors perceive the company's ability to navigate these challenges and achieve future growth. So, what is the takeaway from this filing? Biofrontera Inc. is facing a critical juncture. They've been notified by Nasdaq about their stock price falling below the required minimum. They have a clear deadline and a path forward, which might involve strategic actions like a reverse stock split. Investors will be watching closely to see how the company addresses this challenge in the coming months. From my perspective, this is a sign that the market is signaling concern about Biofrontera's current trajectory. The ability to regain compliance is key, but it is also important to understand the underlying reasons for the low stock price. Is it a temporary market blip, or does it reflect deeper issues with the company's business model or future earnings potential? While they have options like a reverse stock split that is more of a technical fix, the real solution lies in improving business fundamentals and investor confidence. The risk here is that if they fail to regain compliance, the listing could significantly impact liquidity and investor access to the stock. Alright? That is our breakdown of Biofrontera's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they'll be able to regain compliance? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description for more discussions and behind the scenes content. Thanks for watching, see you next time.